Welcome to The Explainer. Today, we're going to break down CBRE's forecast for the U.S. real estate market in 2026. This is basically a sneak peek into the future, so let's jump in. Okay, so here's the big question on everyone's mind, right? We're hearing all this talk about the economy slowing down, GDP growth isn't what it was. So what does that mean for real estate? Is it time to be worried? Well, you might think so, but the headline finding from this report is actually a total surprise. It suggests that despite all those economic challenges, commercial real estate is expected to have a really strong year. Kind of goes against the grain, doesn't it? And this isn't just some small rebound we're talking about. The projection is for a 16% increase in investment activity. To put a number on that, we're looking at $562 billion. That's huge. It's knocking on the door of pre-pandemic levels. Okay, so to really understand this forecast, here's how we're going to tackle it. We'll look at the headwinds, then this big flight to quality trend. We'll spotlight a few key sectors, and then wrap it all up with a playbook for 2026. So let's get into our first section. To understand where real estate is going, we first have to understand the economic environment it's operating in. Okay, so the report sets the stage with a few key numbers. They're forecasting U.S. GDP growth at around 2%, inflation cooling down to 2.5%, and the labor market is, softening a bit. It's this whole picture of a slowing economy that makes the positive real estate outlook so interesting. So here's the crucial point. This isn't one of those markets where just buying anything will make you money. The report makes it clear. Returns in 2026 are going to be income-driven. That means success is all about picking the right assets and, just as importantly, managing them really, really well. And that idea of picking the right assets leads us directly into our next section, which is probably the single biggest theme in this entire report. It's this massive shift in demand. This is what people in the industry are calling the flight to quality. And it's pretty simple, really. It just means that both occupiers, the businesses renting the space, and the investors are all chasing the same thing: newer, higher quality buildings in great locations. The older stuff, it's getting left behind. And this really shows you that split in the market. It's like a tale of two buildings. You've got your prime space, which is getting harder and harder to find and will cost you a premium. Then you have the secondary space, which is much more available, and that's where you might find some room for creative deal-making or even opportunities to completely repurpose a building. All right, so this flight to quality idea sounds good in theory, but what does it actually look like on the ground? Let's check out a few specific sectors. So let's start with data centers. Wow, demand here is just exploding. It's at an all-time high, but the supply side is really struggling to keep pace. And a big reason for that is a lack of power. I mean, you can't build a data center if you can't plug it in, right? So you have this huge imbalance. Now let's talk retail. For years, people were saying physical retail was dead, but it's proving to be really resilient. The demand is being driven by specific kinds of businesses. Think expanding grocery chains, discount stores, and all those service-based retailers. They're all growing and need physical space. And then we have multifamily apartments. And here, the new top priority for landlords is simply keeping the tenants they already have. Why? Because there's a flood of new supply coming online, which means renters have a lot more options. So for landlords, the game has shifted from finding new tenants to just holding on to their current ones. Okay, so we've seen the trends. What does this all mean for you? Well, the report wraps up with a really practical playbook with strategies for both occupiers and investors. So if you're an occupier, basically if you're a business that needs to lease space, the name of the game is being proactive. You got to act early to get that top-tier space. You also need to really understand your negotiating position and think long-term, design for flexibility. Finally, don't forget to consider those outside pressures, things like the labor market or even the power supply. No, if you're an investor, the advice is to be ready to move. This is going to be a competitive market, so you need to be prepared. But it's also a great time to hunt for unique pricing opportunities. The report says to look across the entire risk-return spectrum, from the safe plays to the more adventurous ones. And maybe most importantly, you have to look past any short-term volatility and focus on the long game. So that leaves us with this final thought. The market in 2026 is shaping up to be this fascinating mix of prized, high-quality assets on one hand and hidden opportunities on the other. It's a market of choices. The big question is, where are you going to make your move?